For Wall Street Media, this is Nicki. I'm here with Doug, and we'll help you make money in the stock market with information you can't find anywhere else.
Hey, Nicki, and that's always true, isn't it?
It's always true.
Exclusive stuff, huh?
Always exclusive.
Super good stuff. We've got Rich Gordon talking about Merrill and their portfolio and the recent deal with it and financials. Super timely stuff.
We sure are. Is that for me?
I was passing off to you. That's like my smooth transition. Now it's time for you to talk.
We have a video of Rich Gordon. He announces Merrill Lynch, MER, plans for a multi-billion-dollar write-down on the CDO portfolio as well as a capital raise.
There were a number of significant developments in the financial markets over the past week. For me, the biggest news was that Merrill Lynch announced plans for a large write-down on its CDO portfolio. They also announced another capital raise, part of which is coming from a sovereign wealth fund that's already invested in the company. The CDO portfolio will be sold at an average price of 22 cents on the dollar, and it's being purchased by a private capital pool. The sale price is 14 points below where the assets were marked at the end of the second quarter, so Merrill will take a multi-billion-dollar write-down on it. We consider this event to be significant for a number of reasons. First, I think it marks the final flushing out phase of the write-downs to toxic subprime-backed structures. Now, other financials that have similar bonds probably have to take markdowns as well. I think it's important that even though the assets were sold into what has to be considered a low bid, the news was pretty well received. That's because the problems are being dealt with now instead of keeping a black cloud hanging over the company's earnings going forward. The chart shows financial stocks are higher since the announcement. Second, it shows that there's some level at which private equity funds and sovereign wealth funds who have the capital will buy both the troubled assets as well as the battered equity of the major financial institutions. The ability of these financials to restructure their balance sheets will help keep them adequately capitalized and very possibly independent as well. I also think that this means that we've reached the lows in the prices of credit-sensitive mortgage assets and an extended period of consolidation and balance sheet repair has begun. During this credit crisis, price declines in the subprime sector foreshadowed a broader deflationary trend in the prices of all types of financial assets. It's reasonable to think that the final flush of leveraged subprime structures might be a forward indicator that the prices of risk assets of all types will find a bottom over the next few months. If that happens, it would set the table for better performance of risk assets in 2009. Another significant event is the passage and signing into law of the most sweeping housing-related bill since the Great Depression. The GSEs and the Federal Home Loan Banks will have a new regulator called the Federal Housing Finance Agency. The bill makes official the additional access to liquidity for the GSEs, as well as the potential for capital injections from the federal government if they're required. The conforming loan limit has been temporarily raised up to 125% of the area median home price in high-cost areas, up to a maximum of $729,750 in the continental U.S. When coupled with the sharp reduction in the availability of affordability products like option ARMs and Alt-A loans and the expanded FHA lending program, we expect that for the rest of 2008, over 90% of the mortgage market will be explicitly or implicitly backed by the government. The downside for the GSEs is that the government's additional backing will come with a much tighter regulatory framework and probably the requirement for less balance sheet leverage going forward. A key positive trend for the markets over the past few weeks is that commodity prices have fallen 15% from the highs reached at the beginning of July. Some of this has to do with a slightly stronger dollar, as well as the prospect for slower overall global GDP growth and less demand going forward. But I have to believe that a lot of the trade-off is hot money moving from a sector that had become clearly overbought to others that had become severely oversold, like bank stocks. Another important development is that the Treasury Department announced the largest U.S. commercial banks would be leading the bond market in increasing the issuance of covered bonds in the United States. Covered bonds require banks to segregate assets with certain characteristics, like first lien mortgages, into an asset pool that would back the issuance of secured bonds. Instead of assets being securitized and moving off balance sheet, mortgage assets would remain on balance sheet but be funded through the issuance of the covered bonds. We see this as a net positive for the market because it should allow banks cheaper funding for portions of their balance sheets. The question remains as to whether unsecured creditors will then require higher yields to fund the remaining balance sheet. While the general economic environment remains very challenging, there clearly has been some positive news for investors recently.
Good timely stuff. And guys, if you haven't had enough of Nicki, and really, how could that ever happen?
It couldn't.
We were talking about Nicki reminding me of Kelly Ripa, who I watched on Letterman last night. I mean, I'm not going to go into all the details for you, but watch and tell me if you don't notice a resemblance. Anyhow, we got oodles more Nicki for you tonight. Like 33 tech companies and some nifty ones.
It'll be more.
Big ones, eBay, little ones, TowerStream, which we use TowerStream here. That's how you're getting the joy of seeing us. It's partially through the helps of TowerStream. But that's who you use to upload the files. Did you know that? I didn't know they were public. They presented today. We'll have highlights from them. So come see Nicki soon.
We're here every day at Wall Street Media. You can find us directly at WSMCO.com. Thanks.